Welcome to Rain King Insights. This is a special episode of a GMU Xtra Sun Shower series video. In this episode, we're going to talk about the 7-week rule. GMU Xtras are typically short trading videos on a specific topic. Before we dive in, just remember that all the videos by Rain King LLC are for educational purposes. Okay, let's get into the 7-week rule. This is basically a simple selling technique, and we would use this rule for strong trending stocks. And we've been in a strong market the last few months, so this is particularly useful. It's a way to either lock in gains if you're a short-term trader, or you can gradually start to scale out if you're more of a longer-term trader. Now, the rule I'm going to show you really comes from Gil Morales' book, Trade Like an O'Neill Disciple. The book is old. It's from 2010, but this simple rule is pretty effective. Now, it really came from a trader at William O'Neill called Lee Freestone, so it's got some real backing. So let's take a look at it. Okay, the 7-week rule, we've got a couple of simple qualifiers. The first one is the stock must obey its 10-day simple moving average for a full 7 weeks before we can start using the rule. And this will be more apparent when we look at the charts. And generally speaking, this rule is best used on stocks that are under market capitalizations of 5 billion or less. So let's take a look at what the rule is. Okay, we want to have identified a very strong trending stock. And then we want to use the 10 simple moving average. Now, a break of the 10 simple can be a sell signal for at least half your position, if not all, depending on what time frame you trade on. Because the break of a 10 simple moving average really represents a change in character from the short-term strong trend of the stock. And we're going to show you how you can confirm the actual break. Now, if you only sell a portion of your position at the initial break of the 10 simple, you'll probably use a different sell rule for the remaining half. Maybe use the 50-day or some other selling technique. So let's look a little bit at this little diagram to the right. I'm just representing the 10 simple as this blue line. So the first part of the setup is we get a close below the 10 simple moving average. You can see here we've closed below it. That in itself is not the sell signal. What we're looking for is the next day or the next 1, 2, or 3 days, we undercut that low of the first day that breaks below the 10 simple. That gives us a little bit more assurance that the stock really has lost its short-term momentum. If it were to not undercut and rebound back above the line, there would be no sell signal. So I wanted to clarify what we mean by a break. The break has to be confirmed by a break of the prior day's low. Let's look at some charts. All right, here's CoreWeave, one of the big winners of this year, which had an incredible move from April till July. Now, there's the rule, the 7-week rule. So in CoreWeave's situation, the blue line here is the 10 simple moving average. The purple line is the 20-day exponential, and the red is the 50 simple. So we break out of the stock here. That's day one. You'll notice that as we're moving the stock up very, very strong, we're above the 10 simple for many, many days. And then we actually get a close below, just below the line. But it's not 7 weeks yet, so we can't apply the rule. You'll notice that we don't reach day 35, a full 7 weeks, until up here. And there have been no violations of the 10 simple in the first 7 weeks. You can see here, this little break here never had a violation. So therefore, we can use the rule when we do get the break and the violation. You can see here, on this day, we get a 3-bar break. We close below the 10 simple moving average. And the very next day, you can see we undercut the low. That triggers the sell rule. So at that point, you're either selling a portion of your position, or if you're a short-term trader and you want to lock in all your gains, you can get out and take your gains. Here's another very hot stock the last few months of May and June. This is Sezzle. And again, pretty simple. This one we actually all started the run with a gap up, an earnings gap, big, powerful monster earnings gap in a peg, which is a power earnings gap. Now here you can see the stock is in a very powerful, strong trend above the 10 simple moving average. We had a huge shakeout here all the way down to the 20-day, but you'll notice the stock closed above the 10. So we still have obeyed the line. You can see we touched the 10, but we're still above it with the closes. And we finally get to day 35, a full 7 weeks. Now, since we've made that pre-qualifier, we can use the rule. You'll notice here that we get a nasty candle, a 3-bar break. We close below the 10 simple moving average, but it's not a sell signal yet until we get the next day undercutting the low. Pretty straightforward. We break the low here. You could be out of Sezzle, at least a portion of your position. You can see the sell-off was pretty hard. Here's another one. Here's a recent one of only a couple weeks ago. This is NVIDIA. Big run from May to August. You can see here's the breakout. So this is day 1. And here is day 35, 7 full weeks. We can confirm that we've actually held and obeyed the 10 simple moving average for 7 weeks. Therefore, we can apply the rule. Now, the only exception to NVIDIA is it's more than a 5 billion market cap. So that would be an exception here if you wanted to use it for this really a mega cap stock. But we're going to show it for illustrative purposes. Okay, so we get our first close below the 10 right here. But you'll notice there's no intraday break the next day. We don't undercut the prior low, so there's no selling. Then we have another close below the 10 right here, just barely closes below the 10 simple, but there's no undercut. Then we also get another close below the 10 simple right here. You can see the intraday low, got some support, but you can see the low. And then we finally get the sell signal. We get a 3-bar break, taking out the lows of all these 3 candles, and it undercuts that low on day 2. That triggers the sell rule to get you out of NVIDIA if you wanted to lock in a good chunk of really good gains. So you got to pay attention to the detail. You can see sometimes you're tested, but no sell rule triggers. So we want to pay attention to all those little details. Now here's one more. This is Robinhood, another stock with incredible move off the April lows. And we're going to zoom in a little bit to this congested area over here. So you can see the stock, if you follow the detail, it actually did ride the 10 for over 7 weeks. And you can see here when we blow up the detail, we actually have our first close right here is below the 10. This day here, we actually dipped down below the 10 on an intraday basis, but we closed just above the line. So this is really the setup bar right here. We closed below it. The very next day, really, if you squint hard, we did undercut the low. So that was a sell signal. It's possible that you missed that. If you did miss that, we got another close below the 10 simple right here. And this one's a little bit more clear. We closed below it, and then you can see the very next day, we actually got back above the 10 simple, but we undercut the prior low. So here's the sell signal on Robinhood. And if you were a short-term trader, you would have locked in some pretty good gains and avoided this nasty day here. The stock is currently forming a flag, trying to break out, but we'll have to see whether that remains to be seen if it's going to be successful. So that's a quick review of the 7-week rule. It's a simple selling technique. It's very straightforward. Selling doesn't have to be complicated. It's important, though, that you have rules that you trust and you follow those rules with discipline. This rule is really only used with strong trending stocks for a good 7 weeks before you can apply the rule. You can lock in all your gains or maybe scale out. If you like this video, at RainKingInsights.com, I run my own website, and we have a whole series of short-form trading videos like this one that are anywhere from 10 to 15 minutes long, and they get into all kinds of trading topics. Just go to RainKingInsights.com, go to the free content menu, and pick trading videos, and you'll see 10, 15, 18 videos in the short format. Now, if you want more education and more coaching and guidance, you might want to check out our basic membership to the Raindrop series. These are educational videos appropriate for somebody who's got 0 to 4 years of experience trading. And if you're a more advanced trader, you have 8 years plus experience, you might be interested in the Rain King membership, where we also have a whole series, a dozen or so educational videos on techniques at an advanced level called the Cloudburst series. Now, at the Rain King level, you actually get a weekly video from me that includes specific trade setups every single week. I'll show you pivots, risk management, stop losses, position sizes, etc. Our mission at Rain King Insights is to provide an affordable approach to accelerate your education trading stocks. And we try to do that in a really coaching supportive environment. We have monthly webinars to take all your questions. So hopefully you enjoyed this quick GMU Extra on the 7-week rule. We'll see you in the next episode.